Welcome to the Money Relations Financial Wellness webinar. We will begin shortly. Before we begin, let's tell you a little more about who we are. Money Relations is a financial wellness and education company dedicated to helping individuals, families, professionals, entrepreneurs, and businesses build healthier relationships with money. Through practical financial education, coaching, and engaging wellness programs, we empower people to make confident financial decisions and achieve lasting financial well-being. We're excited to have you with us today.
I am going to introduce our speaker for today, Thamaga Tabane. I hope I pronounced your name right. He is a wealth manager and director at Investiplan, and his focus areas are in financial planning, wealth management, investment strategic design, retirement, and estate risk planning. So I'm not going to waste any time. I'm just going to let him get into what he has to present for us today.
Thank you, Wami, and thank you for the invite. It's always a pleasure to be part of your Thursday sessions. I think this is the second one for the year. And yeah, I'm excited that today we'll be doing more Tax 101. Not be going much in details, but we'll touch the most important part that everyone who's working, everyone who's getting an income would know what is happening. But it's just that the interpretation part of it, it's always an issue. But I'm here to clarify those. So my approach will be more of an engagement, but I'll just use the few slides. From then, I will respond to questions that are there. So we can take it from there. So we're going to deal more with personal income tax. You know, there's tax for business, there's tax for trust, and tax for other different entities. So we can go to the next slide. So there's a table of content of what you're going to discuss today. That will be an overview of personal income tax, overview of 2025-2026 filing season. Then we'll have an income, what constitutes an income. Then what are deductions that allows you to reduce your tax. And then we'll have a tax bracket according to the income that one would earn. Then we'll have tax rebate. Tax rebate, it's also based on segment. That will be based on age, where you'd get a particular rebate. And credits, it's normally the medical aid credits based on your contribution on your monthly income towards your medical aid. Yes, we can go to the next page. Then overview of personal income tax. Who is liable for income tax? That's any person who's earning an income. The income will be salary, interest, and annuity. And on the income is not basically everything where one will be earning 3,000 and be liable for tax. So it's anything from around 72,000 and above where one starts to pay income tax, but that will be based on salary bands or income segments. But why pay income tax? It's for the government to provide essential services like your roads, infrastructure, building schools, building clinics, but one would argue otherwise, of course. But yeah, this is the main reason why the government is taking taxes from you guys. So yeah, we have got income tax is calculated on the taxable income. Then taxpayer may qualify for deduction that reduce the taxable income. High income earners are calculated on the high tax margins. The high tax margin will be up to around 45% of your income. Then we've got tax rebate and tax credits are considered and reduce the tax liability. And if you're not filing or you're filing a bit late, then you'll be subjected to penalties. Interest are charged on the late submissions. But of course, if it continues that you're not compliant, then there's other steps that SAST could do. They can either appoint third party, that will be your bank or your employer, to garnish your salary. So yeah, there are many ways that SAST would use to recoup the tax that you owe. Okay, we can go to the next slide. When you start submitting tax, what is needed? You need to obtain an IRP5 from your employer, and then we verify the information. You ensure that all supporting tax certificates from third parties are available, like your retirement annuities, your medical aids, all these other proofs that you can keep. If you travel and you keep a logbook, you'd have to require to have a logbook and the other supporting document that must be kept as a proof, because you don't just fit the amounts which you do not have proof for. Because sometimes you might be lucky and do those submissions and you're not selected for audit. So, but for the purpose of audit, we always encourage that when you do submission, don't rely only on what is reflecting on your profile with SARS. Always have a supporting document that serves as a proof from the employer and other third parties where you've got products or you've got medical aid with. Because sometimes you might say what is in SARS system is okay, and only to find that there is a bit of omission. So if you've got proof to substantiate what you're submitting, it's always best and it's always advisable. Then in 2026, the tax season has started on the 1st. Between the 1st and the 12th, it was more auto assessment. This is more for a straightforward submission, where you have one having the salary, and you find that the employer has already submitted the medical aid certificate. And if you've got an RA, which is a retirement annuity, the service provider might already submitted that. But if you're a person who claims travel allowances, there'll always be, you would fall on the second category that starts on the 13th to the 23rd of October. But with the auto assessment as well, if you're not agreeing with what you are auto assessed on, you can decide to decline that auto assessment and wait for the 13th when you do verification and also do submissions. Then from the 13th of July to the 22nd of Jan, these are provisional taxpayers. That's business and other non-salary income. Yeah, we can go to the next slide. And we've got an income. What are the things that constitute an income? That will be your annual salary, your bonus, your retirement benefits, your fringe benefits, that's your car allowance and housing allowance. These are benefits that you're given by the employer. We've got rental income, we've got personal business income. These are multiple income streams that one might have. So, but at the end of the period or at the end of the day when SARS starts the tax season, you need to take this into account and look at all your source of income and bundle them together, including those that are already sent to SARS through an IRP5. And if you are having a rental income from a property that is managed by an agency, the agency will provide you with the invoice. You'd also request, if the property is funded, you'd also request the statement from the institution that is funding your property. You'd also be required to produce your rates and taxes, your rates and taxes, the levy, and all other expenses that you might be incurring on an annual basis towards the property that you are renting out. So you might have one who is having an employment somewhere and you're having an additional business. This normally happens with doctors who might be working at a particular hospital and at the same time they're running their own practice. So at the end of the year, when you do the return, you'd have to consider the income from the practice and also the income from the employer who becomes the hospital. It doesn't matter if it's as a private or a public hospital, any of those would issue an IRP5. With personal practice, we believe that one will have an accountant who will do their books at the end of the year, then you're able to get an IRP5 from your accountant. So we can move on. The deduction. So there's an income, there's also deduction. The deduction helps you to reduce the tax. The first deduction will be your pension, but your pension normally, they normally deduct on a monthly basis. Let's say, for an example, you're earning 50,000. There's a 10,000 pension fund between you and the employer. The employer on their payslip, on your payslip, the employer would say salary of 50,000, then will show the deduction of 10,000, meaning that your tax will be 40,000, will be calculated from the 40,000, not from the 50, because the pension contribution has already been deducted. So that is the first deduction, which I did not show here, because that you get it on a month to month. But with the retirement annuity, you have to contribute throughout the year. The service provider will issue you with retirement annuity tax certificate. That's when you'll be able to take it into account when you do the returns. But at the same time, they send it to you and also send it to SARS. That's why in most cases, when you open your SARS profile, you always find your retirement annuity loaded. So in this case, your retirement annuity, you can deduct up to 27.5 of your income. That's income of pension, provident fund, and retirement annuity, limited to 350. Sorry, this one I needed to make a correction there. It's about 430. This was changed from last year. It's about 430,000, the maximum that one can deduct from the three benefits: pension, provident, and retirement annuity. Then we also have interest exemptions. With interest that you get, let's say you are investing, you've got an investment that is doing a good 50,000 per annum. The first 23,000 of that local interest, it's tax-free. So meaning that the difference between that 23,850 and 50,000, you will be taxed on your marginal tax rate. Then you'd also, if you're over age of 65, you'll have an exemption of 34,500, which one would also argue and say, no, but why can't I just do the tax-free savings? Tax-free savings, it's also another vehicle that one can use in terms of saving tax and so forth. But there is limits, of course. You are limited to contribution of 36,000 per annum and 500,000 in your lifetime. So you come and have people that are saying, I want to invest 10,000 per month. You can start by giving them the tax-free, or we start by giving them the tax-free. Then the balance can go in another open platform on investment that will be your unit trust or an endowment. So that's where you start to see this value coming in. But where you start to see the interest exemption, it's when you're doing those growth of 50,000 and above and so forth. The interest that one can start to speak of. So meaning that if you've invested 200,000 and you're growing at 10%, that will be 20,000. So you are still within the range of 23,800. Yeah, we can proceed to the next slide. Okay, the next slide, this is just indicating a different tax bracket that for anyone who's earning between 1 Rand 245 will be within the tax income of 18%. Over 245 to 383 is the first 44,118, which is the 18% of the first 245, and an additional 26%. So then we also have a tax bracket between 383 and 530, which says that they will charge you 79 from the previous bracket plus the 31%. So the last one will be, okay, anything up to 1.8, you are charged 259 plus the 41%. If you're over 1.8, it's 666 plus the 45%. That is the balance. Let's say for someone that is earning 2.5 million, you will be taxed 666, 339 of the 1.8. The difference of 600,000 will be taxed on 45%. So mostly people get confused when you say 45%. So they think like if you're earning 2 million, automatically they'll start by deducting 45%. No. So they start from the first tax bracket up to the last one. So the balance thereof from the 1.8, that's the part where you get the difference of 45%. So yeah, this is the tax brackets that we're having. We're going to go to the last slide. So you remember we said you've got deductions. The deductions will be your retirement annuities, pension fund, provident fund contribution. Then we'll have the interest exemption. We'll also have the tax-free savings. Then another rebate that you always get a rebate of 17,235 if you are younger than age 65. Then secondary rebate, that's for someone who's over 65. It will be the addition of the two, the 17 plus the 9. Then the tertiary, it will be for people that are over 75 that are earning an income. So it will be the 3 of those exemptions or those rebates added together. So with medical aid, let's say you are 3 in the medical aid. There's a taxpayer who becomes the owner of the medical aid. From the contribution, you get 364. First dependent is 364. So normally this is treated as the second one who's the first dependent. It can either be a spouse or a child or anyone, as long as they're first dependent. They're getting same rebate as the taxpayer. Any other additional dependent will get around 246. So what do we do if you want to calculate your medical credits? You'll take this, add them together, multiply by 12 months. It will give you a rebate on the taxes that you're going to save. So we always say medical aid is another room or it's another vehicle to save or to reduce your tax. So yeah, I think that was the last slides. Thank you. And I think we can take questions or we can start to have a discussion. Maybe we can just be flexible in time and roll within the slides if there's any question regarding anything within the slides.
Okay. That's not a problem. I am going to allow people to still send in a few questions. We had one, but there's just one more that came in, and then I'll give Asintabi a chance to ask her question. The first one, but I think it's been answered. I don't know if she still has the same question, but she asked when the 2026 season would open. But if we go back to the slides, I think you've already answered when the tax season started.
Sorry, hi guys. My question is, so hi Thamaga. When you at retirement, right? I've noticed that there are some individuals or clients that can go into a special tax rate when they are doing their living annuity. So from retirement annuity to living annuity. So I'm just wondering, are they able? Do you apply for this special tax rate prior to? Is it like something that I can apply for now, and then it takes effect when I go on to retirement?
Okay. In the response, I would say there's no special rate per se, but you have an option when you go to retirement where you get a tax directive. You'll select an income, I think it's about from 5% to whatever amount that you'd want SARS to tax you. But you need a guidance of an accountant because you might take an advantage of selecting a lower tax, and you find that at the end of the period or at the end of or when SARS start to do the returns, they do reconciliation and the total amount that you received. Let's say you're earning 100,000. You decided to take 5% 5% tax, 5% tax percentage, and you actually required to take 10%. SARS will come, yes, will come and say, Ms. Client, you took 5% tax, which constitute 5,000. But based on the tax bracket, you are on the tax bracket where you're supposed to pay 10,000. We need a balance of 5,000. So that's where most of the people, when they go on retirement, they will settle for lower tax percentage, but it comes and cause issues when you have to do the tax return. So with the guidance of an accountant, financial advisor, or anyone with a know-how, they need to guide you and say, if we need income of this much, we need to be on this tax bracket, and this is the tax that we need to contribute. And another thing, I think while we're still there, you also have what you call spousal income, where two people that are married and one will lose the spouse. And when the spouse is gone, the employer of the spouse is starting to give you an income. That is an additional income. When you bring the two, they always put you in a different tax bracket. So we always encourage that when you are confronted with that kind of a situation, sit with the financial advisor, sit with the accountant, who will be able to match the two income and be able to explain to you on where your tax should be. I hope I've covered your question.
Yes, thank you very much.
Okay, Libona, you can unmute yourself and ask your question.
Good evening, colleagues. Thank you, Thamaga, for the presentation. I want to ask about the travel allowance part, right? So I didn't get auto-assessed, but I started filing on Tuesday. I travel quite a lot with work. However, I don't see that on my e-filing. So what I try to do with a colleague of mine is try to see how I can add like my logbook, for instance, but it doesn't show. This is because I don't have travel allowance at work, but I do travel still. So I haven't applied for travel allowance, but I travel. So I'm not in sales, but I end up having to travel through work. So how do I then go about that? Applying for travel, even though it's not, I don't have it on my payslip, for instance, because it would have shown on the RP5. When we looked at hers, she had, so mine is grayed out. Hers, she could add everything because she's in sales, and therefore her RIP5 would have said that she has a travel allowance. On my end, I don't have travel allowance, and therefore it's grayed out, so I can't claim for it. So how do I go about that?
When you travel, do you claim these travel expenses from the employer?
How I would claim for it, for instance, if I drove somewhere, I have a corporate card. So I pay with the corporate card, and then I would claim for whatever, like per diems and stuff.
And whose car are you using? Is it your car?
I use my car.
Because I think you did just the last question. I'm not trying to create a dialogue, but I just want to get an understanding before I respond. I just wanted to check that when they did the auto assessment,
No, they didn't auto assess me.
The money now.
They didn't auto assess me.
Okay.
I filed.
So
I started filing on Tuesday.
Who's doing your e-filing?
I'm doing it myself with the help of my colleague.
All right. I think you need an assistant, or if it's grayed out, because there's somewhere where you go and say you want to do you want to claim for travel allowance. Once you click that, it will open other command button where you're going to feed the information.
Mm-hmm.
Yes.
Okay.
So firstly, there's that wizard form, wizard form. That wizard form, you respond to it first before it gives you options. So where you did not tick, it won't give you options to add the vehicles and all those things.
So I did click for that, because what happened is that initially it didn't show with the extra claims, like for instance, working from home. it hadn't done that. So after I clicked on the wizard, I had already clicked on the travel. But somehow it's still grayed out with the travel, but I was able then to submit for working from home.
I think you should do the same with, or maybe we can even have a discussion out of this meeting so we can look into it and see how best we can help you.
Thank you. I'd appreciate that.
Thanks.
Okay. Alson Sabi, do you still have your question or do I close it up now? If there is anyone else that has a question, please do raise your hand or put it in the chat so we give you the space and time to get your question answered.
Thanks, Awami. I still have a question. It's just around income and what you include as income. So Thamaga, you gave an example of if your spouse is deceased and there's income that you're getting from their employer. So what about in instances where, okay, let me just ask it like this. Do you get taxed on spousal alimony, maintenance? And is there an age restriction in terms of tax? So if a child is getting, I don't know, whether it's pocket money or money from a grandparent, when would tax kick in for that child? Is there tax for a child?
Okay. Now, for any other allowances, it will not be, because those monies are regarded as an after-tax money.
Okay. All right.
In a nutshell, you could be getting an income from, it would be regarded as an income to your bank account, but if it's coming from someone, it will not be regarded as an income, as an income that is taxable, because already from the source, it is believed that it has been taxed.
Okay. All right. Okay.
So it will be double tax if you have to tax anything that goes into the bank account. Hence, we say the source determines what this income is. If it's rental income, yes. If it's income and allowance on a monthly basis, it's from an after-tax month. If a child is doing adverts somewhere, that is employment. The child will have to have a tax number, and when the payment is paid, then that child will be liable for that tax. It's a special cases that one would have. People will come and say, my child is in, they call it what? Advertising. They're doing adverts for Coca-Cola, they're doing adverts for this company, there's this income, what do we do? Then that is a special case with SARS. Then you go and substantiate when you apply and say, this is what is happening, that's why we need a tax number. Then they'll be able to issue a tax number.
Okay. Are there any further questions? Or is everybody happy with the information that they received? Just raise your hand or a thumbs up just to let me know that everybody's good. Okay. Perfect. Okay.
Sorry, Awami. I just like Thamaga to just speak a little bit to this. Really just around highlighting why retirement is a great way to reduce your tax burden. I know he did touch on it, but if you could just touch on this again, Thamaga.
Thank you, Tom. The contribution on retirement normally will ask for your payslip to check your contribution versus the employer's contribution and merging it with the maximum allowable contribution. So let's say for government, it's defaulting to 7.5% employee and 13% employer. So the two will be sitting on 20.5. The maximum allowable deduction is 27.5, meaning that every government employee will always sit on a 7% shortfall, meaning that when they have to address their retirement annuity, they have to work within that 7%. So contributing towards your retirement annuity, it works the same as the pension fund. Its main goal is to preserve part of your income that you're going to spend when you retire and that you continue to maintain the same standard of living. But then there's also an immediate benefit now for doing that. The immediate benefit, that is the tax deduction. So if you're contributing towards a retirement annuity, let's say for interest sake, this year you're owing SARS 10,000 rand. The next year I say, if you had retirement annuity of 10,000, you are not going to owe SARS this money. So we then say, what do I require to address this 10,000? Then we'll divide it by 12. It will give us a certain amount of money. Then you contribute. So you know that instead of giving that tax to SARS, you got that money into your pocket. It same applies with people that are getting spousal income. I always, on my angle of a financial advisor, always say, let's do a legacy retirement annuity where we address the shortfall. Every year you're paying 50,000 to SARS as an income, as a shortfall that you did not pay. I always say, let's address a retirement annuity, or let's have a retirement annuity while you're a pensioner, which is going to be a legacy retirement annuity. You are not going to enjoy it. You're creating it for your children, that should anything happens to you one day, you'd have already saved this money. But back to that retirement, the main aim is to save for long term, but in the immediate, there's tax reduction that you get. So mostly it becomes practical if we are looking at individual, from one individual to another. Because you also have some municipalities that are contributing 27.5 on their pension. So people will then say, I don't have a room to contribute. But you can still have a retirement annuity, meaning that the difference that you are contributing, which you are not going to get a tax deduction, we call it a non-allowable deduction, but SARS records it. Let's say at retirement, you have contributed non-allowable deduction of 500,000. Then you are taking your pension, they're telling you, you have got 700,000 tax that you have to pay before we give you your money. So SARS brings over that non-allowable deduction of 500,000, then it offsets your tax from 700. We take 700 less the 500 non-allowable deduction, you are left with 200,000 to pay to SARS from your pension. So it doesn't matter how much you contribute over and above your allowable 27.5, there's still a benefit when you go on pension. You're reducing your taxes when you go on pension.
Is there any further questions, or is there anything that you'd like to add, Mr. Thamaga, before we close off?
Okay, my view will be, let's not try to be expert in everything. Do what you do best, which is what you're employed to do. You're employed to make money. Then after making that money, there are things that you need to look into, which you'd have some specialists that can come and be part of your journey, like accountants. You can have your financial advisors who can look into those aspects, because part of it is that when you are earning an income, there's certain provisions that one needs to have. You'd also need to have your risk provision, which are the life cover, disability, dreaded disease. Then you have got retirement annuities that you need someone who is going to know how to assist you to implement that. With normal savings, you can do it elsewhere, but always have someone who can assist you. But if it's a share portfolio, we'd say, look for a stockbroker, or if you've got an appetite to do that, you can do it yourself and see how it goes. It's good that you always diversify on investment, but don't over diversify. So do it yourself is good, but sometimes it doesn't help when it comes to money-wise. Money-wise, always get specialists who can help you, because you'll always, at some point, without a know-how, you might find yourself in the bedside of the tax man who SARS. Because what we do, or what we encourage, is that don't try to avoid tax. or evade tax. Try to get products that can help you to reduce your taxes in the best way that you can through the assistance of those professionals. So yeah, I think though that's my parting shot, that always use the service of professionals when you do these things.
Thank you so much for joining us today and for all the information that you've given us. I think I speak on behalf of everybody here that we were well informed and we can walk away knowing something about tax season. Also, I'm going to urge you guys to please check the chat. It has all of Mr. Tamaga's details, including the link for our WhatsApp line. Our WhatsApp group chat for money relations, just for you to join in, see what they have to offer. I say please do it. Like Mr. Thamaga said, getting professional advice is always the best way so that you avoid any financial implications or any financial troubles in the long run, because you don't want to have that. Outside of that, thank you guys so much for being here. I hope everyone has a lovely night. And that is all from us. Thank you.
Thank you to you and the team. Cheers.